Thanks for tuning in to another episode of Key Factors Podcast. This is your host, Mark Jones, and this podcast is powered by ReviewMyMortgage.com, which is the largest index of mortgage programs nationally. And today, our topic is going to be 203k loans, crisis converted to commission.
Yeah, converting crisis to commission.
I love it.
Yeah.
So I'm joined here with a good friend, fellow colleague, Noe Gonzalez, and he is with Loan Depot. Noe, how you doing?
I'm doing well.
Yeah?
Yeah.
Good.
How are you doing today?
I'm doing well, man. This is, I guess, been on my mind and an agenda to talk about because I, as a producing branch manager, still get the question, I would say at least once every 2 weeks at minimum, do you guys do 203k homes? And the reason for that has to be because of the marketing, the advertisement that they do to get the applications, inquiries that then convert or are intended to convert them out of a 203k home. And it was cool because I had put a social media post reaching out for lenders within the area to see if anybody was willing and able to have a discussion about 203k homes, because I personally have not done any yet. And I've been in the business for
why is that?
Good point. We're going to get into that. But what I found funny is that when someone's looking for a 203k home for a buyer, everybody throws their name in the hat.
Yeah, but when it comes down to it, everyone starts backing away.
Absolutely. So I want to get into that today so that you can kind of educate us on 203k homes. We'll get into some renovation alternatives.
Educate, but also provide my knowledge, right? Like
absolutely.
Apply that.
Absolutely. So let's start with you. Tell me about you. How long have you been in the industry? What do you specialize in? Go from there.
I specialize in helping families into their dream home, right? So I help families finance their dream home, and that's my specialty.
I love that.
What I wanted to add coming into Loan Depot is how could I separate myself with the competition?
Okay.
And one key program that I wanted to take a deeper dive in was these renovation loans. As a loan officer, I've been originating for over 15 years, and it's always the fear. Like you want to overcome that fear of that renovation loan, because as a loan officer, you're like, man, it's just difficult.
No,
But if you take a step back and just analyze it, it's like, no, man, like this renovation loan, it's underutilized. Like, let's do it. Let's help families get into their dream home. And if it needs repairs, let's finance that.
Let's give them that avenue to do so. Mm-hmm. So each time that I am asked, either by a realtor or a consumer borrower, potentially, if we do 203k or renovation homes, it's 50-50. They're intending to buy it to flip, and they don't get the concept of it, or they do, and they read somewhere, so they're wanting to purchase their first home, but they want to do all these upgrades and all these things to it before in doing so.
From my end, originating home loans, and they'll bring up that 203k, I've always talked consumers out of it, or agents, because it's that fear of the unknown and assuming it's going to be a difficult process. And not knowing you steer them away. Like, why do you want to buy a property that needs repairs?
Right. That makes sense. I mean, and I do the same thing. And I consider it educating, but I believe most, including myself, need to be educated ourselves on the process of 203k, how it can be utilized, and some of the advantages of it for consumers directly.
Or take that leap and try it.
Well, I tell you what, I don't really try things. I either do or I don't do. So when I make that commitment to do so, I want to be educated on the subject. So,
but you have that knowledge. You have that wealth of knowledge that you could structure financing.
Sure.
You're just adding a different piece of the puzzle, right? Like you're just adding more.
Let's get into that. The last couple of 203Ks that you closed, which we'll definitely get into once we've gone past how they work, all that good stuff. We'll talk about how it can be used as a niche to grow your business. But in doing the 203k homes, take us through that process. I mean, somebody comes to you day one and says, Noe, do you offer 203k renovation homes?
Absolutely.
And how does that work? What is the process?
That gives me an opportunity to have that conversation with either that realtor or that family that's looking to do that 203k. You have to have that deep conversation and expose everything. It's not your 30-day process. It's going to take 45 to 60 days.
Okay.
But at the end of it, there's so much more potential for equity in that home.
Sure. No, absolutely.
And it gives you an opportunity rather than buying a home that an investor went in there and did their work and now they're flipping it and making profit. It's like you're creating your own dream home. You're going to go create that kitchen that you want.
Gotcha.
So that's a great opportunity for you to sell it to the realtor or that family.
100%. So I guess I don't want to talk too much over folks' heads as we get into this discussion. So let's take it back just a bit. Can you tell us what a 203k home is? Just the basics of it.
Basic 203k, it allows you to repair or do some renovation to that property.
Okay.
Maybe you walk in, it's outdated, right? Like that kitchen has wallpaper. You want to go in there and just recreate your kitchen. It allows you to add that renovation into your financing. So you're financing that repair or that renovation.
Okay. And is it a specific loan program type? What are the requirements? Typical things of that nature.
On a 203k, it's an FHA loan. So
Okay.
minimum credit score on a renovation loan with Loan Depot is 620.
Okay.
As long as they meet those minimum guidelines and it runs through that automated system and
Right.
they qualify, we're running with it.
And-
I would say,
Go ahead.
what I've learned originating these renovation loans, the number one thing is getting in front and talking to that family, getting that general contractor. That's the most important piece of the puzzle for
Okay.
my end. Like that's what you have to control. That general contractor has to get those bids.
So my basic understanding, and you can fill the holes in the gaps if there are any, because as I mentioned, I've never done one, but I have explained to customers the process in itself.
Mhm.
Essentially, you find a home that within reason, and I don't know the dollar amount, needs some work. And we're not just talking countertops or layman upgrades. Like the home actually needs flooring. It needs windows that have been broken, things of that nature. They have to then contract on the home, allow the lender to find the contractors for the project. And again, that's just my understanding
Mhm.
because they have to be FHA certified. And then they can move forward, which essentially they close. Then the work gets done with the funds being held in escrow. Then it closes a second time. Is that correct?
There's two loan programs that
Okay.
FHA offers. There's the 203k, right?
Okay.
Within that 203k, there's two loans. There's a standard, and then there's a streamline that allows you to roll in up to $35,000 worth of repair. It's
Okay.
a streamline.
So it's not a percentage, it's an actual dollar amount.
correct.
Okay, gotcha.
So once you surpass that $35,000, like that, you have to go to that 203k standard loan.
I see.
Mhm.
Okay. And that process in itself, as you mentioned, it's a 45, 60-day process. Is that from the time that you close, or they have to get the repairs done within that time frame? What is that?
From contract to close, it's about 45 to 60 days.
Okay.
And I add that extra 15 days above that 45 because what I've learned in my experience, it's that general contractor and making sure they go out there to inspect the property and give you some detailed specs, like
Okay.
or the contract.
So
work.
they're not guessing.
No, they're not
on-
guessing because that's
on-
going to impact the appraisal report, right?
Gotcha.
So if you turn in a half-ass bid, roof, floor, an appraisal doesn't have anything to go with. Like they're just going to appraise the property based on a roof being repaired.
Gotcha.
But if you go in there and be specific, it's this level roof. It's this level of
So
granite.
as you, as the consumer, are painting the picture of what your intentions are and what it's going to look like, end up being in the end, so that they can give you a, I'm not going to say concrete value, but a opinion of what they believe
It's an
it should
opinion of
be.
value,
Right.
and it's what you present to that appraiser. It's like when you're buying a new home where they give you the plans and specs, and they
Right.
go that builder specific, the level of granite, the
Mhm.
level of flooring, everything. That's going to help the appraiser appraise that property, and it's going to be comparable to that type of home.
Oh, that makes
Mhm.
sense. That makes sense. So with the folks that I guess are doing this for investment purposes, I know there are programs out there, but this is not one of them, correct?
No,
This has- since
that
you mentioned
FHA
FHA,
loan is for your primary residence.
And I'm
It's
going
not
to
an
play
invest-
super ignorant on this. I want to make sure that I'm not thinking over it or alluding that I know the details of a 203k. Now, if you ask me, which we'll get into later, alternatives to that, solutions in regards to not having to go through that process. And I say not having to go through that process because my assumption is it's a nightmare. Matter of fact,
It's the fear of the unknown, right? 'Cause
absolutely,
it's like, man,
sure.
You hear these stories like, man, it was difficult. It took too long. And at the end, it didn't appraise.
Right.
So we can do it.
When I would say my first 3 years, when I would get that question asked, which it was asked a lot,
Yeah, obviously.
2012 through 2015, when HGTV was coming out with all these flips and things of that
Correct.
nature, I'd get the question a lot. And luckily, there was a review on Wells Fargo and a big lawsuit on another one. So I would tell people, just go online and Google 203k nightmares. And that
Yep.
did all the work for me. I mean, it literally would scare the folks out of doing it to then switch over to pre-owned home. And utilize their own funds or leverage some type of personal loan to do the renovations after the fact.
Well, that's why consumers are going to these new builds, because they don't want to go into that established neighborhood that's outdated because they don't have the money to do the renovations.
You're right.
Or the repairs.
No, you're absolutely right. I mean, that's another reason why my wife and I actually got into flipping recently, because of exactly what you're saying.
Correct.
But if there are programs out there for investors to potentially use to leverage, we can talk about those as well. And I want to, I guess, paint the picture that, I don't know, the honest truth is a 203k home tough? And we're talking about crisis averted. Give me a situation in which there would be a crisis that a 203k home would save you. And if you could just articulate that to us and we'll dissect it.
So as an originator, I'm going to paint it this way to you.
Okay.
All right, you originate a loan. It's a 203B FHA loan. Appraiser goes out there. The property comes back subject to repairs.
Okay. And what type of repairs?
Say roof.
Major repair.
A major repair, right?
Gotcha.
But it's within tolerance, right? They're within a $25,000 or $30,000 repair, like you could proceed.
The tolerance that you spoke about, and that blew my mind when we talked about it the other day. Can you enlighten them
that's
on
actually why I want to take a deeper dive into these 203Ks. With FHA, if you originate a 203K renovation loan, that property comes back subject to repairs, right? Because it doesn't meet minimum guidelines. Like, you need to repair it.
Correct.
There's a 10% tolerance rule on that value. So that's what most people don't know. So that's where
I did not know that.
That whole podcast,
Correct.
I didn't know that. And this is why, like, oh my God, like, there's so much more opportunity to add value to your referral partners or families to say, hey, you could take that 203B loan. Mm-hmm. Let's convert it to a 203K. Let's add that $7,000 worth of repair. You're within that tolerance rule. Let's close it. It's 3.5%. That's how you convert. Crisis, like, where most people would say, like, man, it's a dead deal because seller's not willing to do the repair.
Right.
Buyer doesn't have the money or is unable to do the repairs because they don't own the home.
Not yet. You're correct.
No, correct.
And the seller either doesn't want to pay or don't have the funds, just like you said. I mean, it makes perfect sense as to why someone would do them. Where does the nightmare come into play? I mean, there would be no
I'm going to
reason
speak from experience.
Sure. Is it within the process? Is it the, like you said, the fear of not knowing?
It's the fear of the not knowing, but adding other components, adding that HUD inspector that needs to go inspect the property once that repair has been done to maybe give that next drop.
And that would be after closing?
After closing. From a seller's perspective, man, it's a contract. You're doing the contract as is. You just have to label a 203K. From a seller's perspective,
as the seller, once it closes the first time prior to repairs, you're done.
Seller gets their money.
Your hands. Very
Correct.
Good.
So from a listing perspective, like, man, there's a great opportunity for you to convert that, and just don't advertise your property as a conventional loan. Like, offer it. If it needs repairs and your seller's not willing to do it,
open up the market.
Open it.
Yeah.
Correct. Create inventory.
Absolutely. Mm-hmm. Go ahead.
I want to mention the 10% tolerance. So house is under contract for $250. Comes back at $250, subject to roof being repaired. Mm-hmm. Seller says, like, I'm not doing the repairs. It appraised, it's $250. You as a agent, you can't close it until that repair is done because it's subject to.
Gotcha.
So in most cases, people walk away with it, right? And that's why everyone fears these FHA loans, because the appraisal is more difficult.
Let's pause there on that concept, because that, in my opinion, is very misconstrued and widely unspoken. In my opinion, and this is, I've done many loans, you've done many loans.
Correct.
The difference in requirements from conventional to an FHA appraisal are very slim, if any different at all. Go ahead.
The way I talk about it, it's an individual that's going to appraise the property. The property is a property. I'm an appraiser. It's my opinion of value. So it doesn't change.
Well, in addition to
additional requirements and inspections,
you would see, and you hear it quite often, there needs to have flooring put in. So we're going to go conventional or only list it for conventional. Well, you're still going to need flooring if you want to close it conventionally. And people have a misconception that if you go conventionally, that you're going to get more value. You're not going to have to do repairs. It's like if an appraiser is going to turn around and just like, no, I'm not going to. Most
appraisers,
listeners that do conventional loans also do FHA loans. So it's the same appraiser. They don't appraise differently per loan program in that way. Now, if it was a 203K appraisal, it makes sense for them to notate the line items of repairs that need to be done for this home to be livable to move forward.
Well, on a 203k appraiser, the appraiser is going to go out there with that bid, that general contract, and they're going to have, it's like the specs. They're going to go line item by line item and appraise that property subject to these repairs being done.
Gotcha. So now that's another question that I have is at the point of appraisal, is the appraiser parlaying or choosing the FHA certified contractor, or are you in charge of that? And if you are, do you kind of use the same folks over and over? How does that work?
As a lender, we can't refer the general contractor. We can give them a list of general contractors, but it's you as a consumer that picks the contractor. Because at the end of the day, you don't want to be blamed like, hey, this general contractor and Mark Jones told me to choose.
Right.
So you got to back away and just say, here's a list of general contractors, or here, agent, like you refer the general contractor.
And I've heard the other way around, but again, I've never done one. And this could be something that other lenders out there say to keep others from not doing it. But that is, you have to use an FHA certified contractor and the borrower can't pick.
It's a HUD inspector.
Gotcha.
The inspector's separate from the general contractor doing the work.
Absolutely.
That HUD inspector is inspecting that property to ensure that general contractor has done that work that's specified in that bid. So they're ensuring HUD, right? There, it's another party. It's a HUD inspector that goes, inspects the property for you as a general contractor to submit for your next draw.
Okay, that makes sense.
Yeah.
So that being said, at what point in time, you as the lender, are you done with the transaction?
I'm done as soon as they sign the contract. I'm out. Like, no.
But at what point in the transaction do you still have to continue on until the repairs get done and the home is complete? Or once you close the first time, you're done. It's now.
Are we talking from like compensation to the loan officer?
Both. We'll talk compensation and we'll talk you within that process.
Once that loan closes and it's that loan amount, you're technically done as an originator.
Okay.
You get paid or compensated based on that close date. Now, obviously, you like to be in contact with your clients. Like you're there every step of the way. So from my end, yes, I'm
Which
there.
then adds the value and why you continue to get this type of business.
Absolutely. And then you also gain knowledge like, hey, how could I utilize what I learned from this transaction? Let's apply it to the next one.
Absolutely. No, I like that. And that, as we were probably going to talk about earlier before we jumped on here, but this is an untapped spigot, in my opinion, because of the fear of it.
It's a spigot, but you could turn it on and just flow the market with it. Like if you really, you get the process down and you create it, like you could have it down pack where it makes sense for you to do this renovation.
No, absolutely. I mean, I can see that. And again, I believe it has to do with the fear of the unknown, as you mentioned. And when we talk about it, you have to be certified or take a class to do something. And then if you want to do different types of programs, same concept. But then if you don't do enough of them, and this is my experience within a corporate mortgage company.
Okay.
If you don't do enough of them within the year, they really don't want to invest in that for you, which makes perfect sense to me thus far. So for those, I mean, you tell me.
From my perspective in transitioning to Loan Depot is we have our renovation department.
Gotcha. Yeah.
I originated it. It's assigned to a renovation specialist.
Gotcha.
I'm still the originator, but once they take over, it's within our company where you feel comfortable.
That's very smart.
From a local loan officer, you send it, you're basically brokering it out.
And this is all they do all day.
Correct.
I love that. Yeah.
Our team, I could pick up the phone and talk to them and like you could see the email correspondence going back and forth and just knowing, okay, this is what's pending. This is what the contractor needs to provide. Here's when the HUD inspector is going to go back to the property.
Right.
Here's when that second draw is going to be released.
And I asked that because a bit ago, I actually jumped on here and typed into the Google machine 203k renovation loans. And lo and behold, Loan Depot was number one.
We're number one.
Number one. So you guys are putting quite a bit of marketing dollars behind this, but it says 203k loan experts. And essentially, you guys stand behind that. So it makes sense to have a department and you with the knowledge up front to even think that as an opportunity, a means for that borrower to complete their goals. You know,
so think about it from an originator's perspective. There aren't any other originators out there promoting that product. So
Not in our area.
We
Obviously,
try to create our niches. So
yeah, we found that out when I put the social media post out, and
Correct.
it didn't have to do with I have a borrower that's looking for 203k. It was I need somebody to talk about 203k, and all of a sudden crickets.
Well, yeah, that initial conversation you and I had, and I thought, man, that's amazing stuff that you're doing. You're bringing together other loan officers where other people aren't willing to do so. It's like, man, let's have the conversation.
Oh, absolutely. We can all learn from each other.
Absolutely.
I believe that. And on another podcast that I do that has to do with millennial entrepreneurs, the idea is mindset. And there's no one person that robs me of anything. So you can only gain from other people if you put yourself in the position to do so. And this gives us a pretty good outlet to do that. In addition to it's therapeutic, as I mentioned before. I'm telling you, I had a guest on yesterday, and she said, this is a dream, being able to have intellectual conversations about what we do for a living. And we've been doing it for a while.
It flows naturally too. As you continue to have the conversation, it just flows out, and like you'll get other ideas. And it's like, man, that's the way Mark thinks about it.
Oh, absolutely. Now, let's jump back to renovation. 203k, I think that there's plenty more to be said about it, but I do want to kind of dive into additional programs that are out there that you know of for the purposes of renovation, even renovation for investment purposes.
So do you know that Loan Depot, we do VA renovations at 100%?
I did not know that. See, and those
so that's
niche
the fear, right? Like
products,
people don't want to accept that VA offer because it needs work. Man, help that veteran out and do a VA renovation at 100% financing.
And that would be awesome. Now, you saying that, again, it's all about opportunities. ReviewMyMortgage.com is the largest index of mortgage programs nationally. So that would be a program that I'd need more information from you. We'd put it on the actual site and search engine and tools that you would be essentially the sponsor in your area for that specific program. And essentially, I need all the education for it so the consumer transparently can educate themselves and not necessarily hold the lender accountable, but don't go into it blindly. And I think that is a big piece to what generation is purchasing right now. Has a lot to do with reviews and access to things quicker. So
I think the consumer wants to self-educate, right? Rather than just go directly to the loan officer and not have any knowledge or don't know what questions to ask.
Right.
Like they're going and educating themselves to try to prepare themselves. So when they have that initial conversation with that originator, they know what to ask.
Absolutely. No, absolutely. And there's tons of things on the internet. And as I mentioned, you'll find what you're looking for. So if you're looking at something wrong, you're going to find it, and then it'll confirm you're wrong, but you'll think you're right.
Just the name of it, review it. Okay, let me review it. Like here, let's review.
100%.
Yeah, let's review what someone else told me.
Yeah, no, absolutely. So are there any other programs out there aside from 203k that you guys know about? The VA one that we just talked about.
100% renovation. We're able to do the conventional home style renovation.
HomeStyle.
That's 95%.
Okay.
Conventional.
So HomeStyle, and I would refer those out at a previous company. We had a department just like you're talking about to where you pretty much set up the front end and you're able to hands off because we send it to a loan officer that's all they do.
But you're not a hands off individual.
You're correct. You're absolutely
yeah. That's
correct.
why it's difficult. Like, I could originate it, but I'm going to have to send it off, and it's like
correct.
The fear,
control.
It's
loss of control. Absolutely. And I don't like making promises that I personally can't keep. It's all about setting expectations and doing what you say you're going to do when you say you're going to do it, and putting that. Now, mind you, I don't steer away from brokered loans because I have a pretty good relationship with a couple of different broker lenders that if they say it's going to happen, it happens. Because
from an originator, you have that knowledge. You've already put that puzzle together. Right. It's just you're going to a different branch to just close it.
No, I like that. And I personally don't do them. So I may just create a funnel that goes straight to Noe for stuff like that. I like that. So is it HomeStyle?
HomeStyle renovation that offers
HomeStyle and HomePath, or it's just HomeStyle?
HomeStyle renovation is the Fannie Mae renovation loan
for investors or private.
Yeah.
And I think on the investment side, it's 10% down.
I don't know. I'm not going to speak on that investment property because that's another
different ball of wax.
Yeah.
It really is. And I think as I move forward with this, I'm going to maybe educate yourself on that, and then we'll bring you back to have that discussion, because we've got listeners on this that are consumers, lenders, realtors, insurance, and are looking for this transparency to, I guess, give them the comfort that, maybe I should jump at that opportunity versus referring it out or just saying, no, I don't do it. And alternatives to that, which kind of leads me into that. what we've done in the past, or what I've done in the past, if someone comes to me for 203k purposes, my goal is to educate them, as we mentioned. And I think realizing it now, I was not necessarily educating them the right way. It was more so educating them in a way that allowed me to switch to an alternative.
To retain them, right? Or
100%.
Correct.
Absolutely. I'm being honest. Yeah. And those types of alternatives would be purchasing the home, making sure that it was livable at the time of purchase. And
Yep.
I would say 90% of them.
But on that purchase contract, it's as is. So as a realtor, it's not subject to repairs. It's
Correct.
You're doing a contract. It's a typical contract, but on your third party financing, you're labeling it 203k.
Yeah.
So from a seller's perspective, it's still a residential. It's a as is property. It's not subject to the repairs because the repairs are going to be handled by the buyer rolling into their financing. From a seller's perspective, it doesn't change anything.
It doesn't change anything. No,
Mhm.
No, it doesn't. Yeah. I mean, that's pretty eye-opening.
So something that I want to share and what I want to kind of add value to my realtor or referral partners is go back to your MLS. Why has this home been sitting there for 125 days? What happened? Why is it back on the market? It was subject to repairs and the seller didn't want to do the repairs.
100%. I mean, and if you're not already, you should probably start filming that, putting some stuff together where you're just educating others that this is an opportunity and an outlet that most don't even think to tap because of the fear of moving forward.
Correct.
Or the fear of failing at it and not getting other customers in that aspect. But from what you're telling me, and I've known two others, and mind you, I know lenders all over the place.
Right.
I've known two others that have closed 203k, and one of the two ended in a lawsuit. And it was like, my gosh, what happened?
That lawsuit was probably like, I referred that general contractor and they came back and said, hey, Mark referred me where you're as a lender, you're not supposed to do that.
And that would make sense now.
Correct.
Yep. The other one went through just fine. And I'm thinking, man, why haven't I offered that? Why haven't I at least looked more into that?
I tapped into that when it was exposed to me through our company to say, hey, there's that 10% tolerance rule. So
did you know that prior to going to Loan Depot?
Absolutely not.
That's
no,
cool.
I didn't.
Okay.
So on a 203k, there's
so then I don't feel that dumb.
No, like I didn't know that. And
Most people probably don't know that.
Well, you don't even know how to answer that question when they ask, well, what if the property doesn't appraise with these repairs?
Right. The correct response or the typical response is we'll have to get the sellers to pay it. Or do some type
reduce
of
the sales price.
Yeah, absolutely.
So $250, it needs a $7,000 repair. If it's a 203k, you could go up to $275 because there's that $25,000
So let me ask,
tolerance.
is there a minimum amount that you have to take out for that to go through?
Mm-mm.
And then it just has to make appraisal at the new amount.
Correct.
I see.
Mm-hmm.
I mean,
not absolutely the new amount because it's a 203k, and if it comes in at 250, but with the work done, you're at 260. You have that buffer. You have that $25,000 where it doesn't change.
That makes sense. That makes sense. Noe, I think you, like I said, if you don't already, I think you need to create some marketing material that's fire and get it out to as many folks as you can. I know that Loan Depot's already doing a great job here because we use a lot of Google ads and things of that nature. So I understand the algorithms and what they're spending money on keywords, and nobody wants to compete in that space of 203k. I mean,
it's an untapped source.
And we've got Loan Depot. We've got Texas Mortgage Group, 203k and HomeStyle. Yep. And then
which is probably
Market. That's not a mortgage company. 203klenders.com. Here's something as a resource. And this is probably some type of lead generation machine that just
input
gets
your information.
Captures the customer's information, gets it over to somebody to try and convince them out of a 203k home.
And I bet you Loan Depot is going to get in contact with it.
Yeah, absolutely. I mean, it's just, I guess, very eye-opening as to, I'm not going to say the ease, or instead I'm going to use the not as intense process that we all believe that you would go through in offering a 203k to your customer. True.
Well, you gain that knowledge, but our biggest goal as originators is making someone feel comfortable with the process. Mm-hmm. You already have it down as an originator. You're just adding another tool, right? Have you thought about this and simplifying it?
I'm not saying I'm going to be adding that to my process because we've got a great process and we don't focus on any product in particular, but we also don't turn folks away in given situations. For the past, 9 years, it's always been, let me educate you on what a 203k home is and what you're about to go through, and then go to Google and search 203k nightmares and come back. And that in itself was enough thus far to be able to get out of those situations. But I will tell you, over the last 9 years, I've been in many situations to where the home didn't appraise, not because of value, but because of the repairs needed.
So what happens in that situation? What typically happens?
The deal dies.
Correct.
That is exactly right. And I believe that's why we turn crisis to commission if we go down the path that you're preaching here, because you've got to take shots. I mean, it makes perfect sense.
Absolutely.
Well, I mean, Noe, is there anything that you want to add? I think this is very enlightening, 100% in regards to, I guess, pulling the curtain back from what we believe to be the truth. You go online and search 203k just like we did. And as I scrolled past, there's like 5 companies that offer it. And then the rest are all forums talking bad about it.
Correct. It's the fear of the unknown. Like, what are you going to, like, you're going to steer them away. You're going to fear them away from that product.
Right. Man, very eye-opening. So alternatives. Didn't want to wrap up yet. Let's talk about some alternatives real quick. Do you still, in some cases, given the customer situation, offer alternatives that a 203k would not be a good route for them?
It's depending on the amount of work that's required on that property. But if it fits and they want to dream and customize their own home, let's go. Let's do it.
See, and my understanding is that you can't necessarily customize it. It's more so for repairs, and you can do upgrades while you're doing that within that, what is it, 30,000, 35,000
That's
tolerance? 10%?
The 10% rules the value on the property.
Okay, sorry.
But the 203k streamline is up to $35,000 where it doesn't, that process doesn't take as long.
Okay, gotcha.
Right? Like you get 50% at closings distributed to that general contractor for labor or material.
The first draw.
Yep.
Boom.
And then once it's done, the HUD inspector goes out there and they release that second.
Okay, very good. Yeah, I mean, that, again, in the past, I have essentially said, look, guys, if you want to do these upgrades, because most of the time it has nothing to do with the livability of the property. The realtor does a good job of going, I don't think this is going to qualify for conventional or FHA. I think realtors in our industry are also scared of the 203k. They don't want to deal with it. And again, they're leaving opportunity on the table.
But they walk away from the transaction saying we can close it. So now it's back on the market forward. Now we're only accepting conventional because it's going to be an easier process.
Right. And then they go through it again.
Correct.
Lose. Yeah. And then an investor comes and buys it.
Correct.
Because they believe that
and
it's
what
not
I've noticed
worth
too, some of the sellers don't want to sell to investors, right? They'd rather sell it to a family that's going to
notice as well.
Yeah. So why not give that opportunity to that family that's looking to build their dream home, maybe renovate that kitchen and just roll it into financing?
Yeah. No, I mean, as mentioned, the idea behind this before this discussion was consumer, go ahead and buy the home as long as it is livable, because the unlivable properties was totally out of the picture. At the word, you need flooring, but you can't pay for it and the seller's not willing to. Okay, let's move on to another home. Both myself and the realtor. Then the advice is go to SoFi, go to
get a
personal loan and do the upgrades. But I also would educate, and the realtor would help in educating on don't add too much to the property that you overprice yourself within your neighborhood where the comps are. And I believe that the 203k almost keeps you to that limit so you don't get yourself
What's going to be exposed with that appraisal, right? Like you have your specs and plans. That appraiser is going to appraise that property per those repairs that you're doing. Now, if you close on that home and you go do repairs on your own on a personal loan, like you don't know what that value is.
No, you're right. You're right. I mean, unless you get with a realtor prior to. I mean, we do that on our flips. Essentially, we go and view them, see what repairs are needed, estimate, okay, run the comps. Is it going to make sense? But we're also looking at it from a perspective of there's got to be X amount of margin in there for us to move forward.
So here's another thing that I'm looking at.
They can go all the way up to what they believe it's going to be worth to get the repairs and what they're needing done.
Right. I had a scenario where we closed a 203k streamline. They added, it was $31,000 worth of work. When that appraisal came back, subject to being that the fact that that general contractor gave such a detailed repair list, right, or with the items that they're going to add, that property came in $50,000 over sales price or appraised value.
Wow.
So they're walking in with the equity, right? There's that $50,000 and you're closing it under an FHA loan. So light bulb goes on in my mind. It's like, guess who I'm going to contact in 12 months? I'm going to refinance because they have that $50,000. I'm going to $50,000 worth of equity. I'm going to refinance out of FHA
And
into
save them
conventional.
some money.
Yeah, out of FHA back into conventional. No MI, because I know
The equity's there.
they added that value.
You put it there.
Correct.
You help them get it there.
Mhm.
That's a pretty cool, not only feeling, but also, as mentioned, a spigot that is untapped. And it can be a continuous flow if you think the way that you did just now, which is essentially, this is the means by which we accomplish this goal. Now, after time has passed and you're allowed to, let's get you into the program or product that fits your budget, your needs, everything else, to give you some relief and some satisfaction that whatever you did was the right thing.
And I'm going to be honest with you, the interest rate's slightly higher on a renovation loan. So that's where I'm
As
thinking
it should
about
be,
it.
though.
Correct.
I mean,
because it's more risk.
Absolutely.
Correct.
Yeah.
But you see it as an opportunity too. It's like, man, this particular property appraised $50,000 more than the sales price. Wow, like I could come back and refinance them out of FHA into conventional, lower their rate, remove mortgage insurance.
And I think those, back to kind of the rate comment, those that are able to accomplish going into a property for the first time, second time as your primary residence, actually getting the repairs done, moving in, I don't think they're worried about the interest rate. I mean, as lenders since 2008, we can't overcharge people.
Correct.
So, I mean, it is in line with what the market does.
Absolutely.
And you're right. It's a great means of accomplishing that goal.
Yeah.
It really is.
And I only bring that up because you're an originator. It's like, man, there's a pipeline down in 12 months. I plan to be in the business. Absolutely. Here's an opportunity for me to help another family out and refinance and lower their interest rate and put them in a better situation.
100%. No, 100%. I will tell you that I probably won't. I'll educate my loan officers and let's see if we can get a 203k or renovation loan specialist within it. But the opportunity is there. I'm great at the marketing side of things. So I think collaboration down the road is probably a smart move on our part, especially for something that, again, I've always steered away from. And I will say that most of the folks in San Antonio originating do the same thing. They'll tell you different things, but I found out the real story when I posted and said, hey, I need somebody to talk about this subject. And everybody went and hid in their holes.
It's like, I don't have that knowledge.
But then you come right back with a, hey, I have a buyer needing a 203k loan. Who will help? Boom, boom, boom. Everybody wants to jump in.
Everyone wants to chime in because the goal is I'm going to talk to that borrower and convert them. And I'm not going to use that 203k because I'm going to
flip them to something else. Correct. You're exactly right. And I think that's eye-opening for both consumers, other lenders that are trying to grow their business or growing their business, and realtors as well that think outside of the box or have bigger boxes to think in.
Correct.
Is there anything that you want to add? I mean, thus far, it has been absolutely enlightening on my part. I totally did not know most of the things that you were talking about. But again, that comes from me not being willing to take the next step on that avenue on this, I'm going to call it a mythical creature that we've never seen close. We've seen a couple of them in my career, but no one has ever specialized in that has given the confidence to go, this is an outlet that you should be using.
That's one of my goals going into 2022. It's like, how could I add value to not only my families, but my referral partners? And I absolutely want to dig deeper in these renovation loans.
That's awesome. And I think that's a great decision being made for 2022 goals. I think you're going to crush that goal. And if there's anything that I can do to help that, you let me know as always.
And you've helped out a lot just having me here and having this conversation with you.
Thank awesome. You. Absolutely. Let's see here, guys. So a couple of key factors in regards to this discussion. 203K. Do your research. Education is the key to just about everything in life, as I always mention. In regards to homes that don't make appraised, not value, but appraisal, which are subject to certain repairs, look into the 203K as an option. We learned about a $30,000 tolerance 10%.
There's a 10% tolerance rule on a 203K opinion of value.
Perfect. Again, something I did not know. And as Noe mentioned, before he switched to Loan Depot, he didn't know either. So it goes to show that not all lenders are created equal. There is a wealth of knowledge throughout our industry from different companies. And I believe that's also why we came up with reviewmymortgage.com. Essentially, it's a melting pot of different expert lenders that you can trust, you can go to for advice, and you can educate yourself first and make sure that they know what the heck they're talking about, because we don't put them on there as pro lenders unless they do.
So what good is our knowledge if we don't apply it, Mark? Like we we have years of experience in originating loans and we have this knowledge, but if we don't share it, it's just untapped knowledge. Like you're not putting it into action, right?
I wish the whole world thought like us.
Well, that's what changed my mind. Like, man, I have this knowledge. Let me put it out there.
I love it. I love it. Well, we're changing lives daily. Thank you for joining us. I really appreciate you being on here. I don't know if it's out of your comfort zone, but you did very well. And first time on a podcast?
Yep.
Awesome. I love it. So then I'm going to have you back. We'll think of a couple of different topics and we'll go forth.
And like you said, you speak Spanish. So let's have one in. Let's
all our listeners and viewers, puedo hablar español también. Si quieres.
Gracias.
Ahí te miro. Good to see you guys. Thanks for tuning in. We'll catch you on the next one.
All right.
Thanks.
Thank you.